I want to bring in Gary Kaltbaum. He's on the telephone with us. Gary, your assessment on the market, its reaction not only to, of course, the Apple/China news, which it felt like it was digesting not too badly, down 300 points, but then the bottom fell out on an ISM manufacturing report, which still shows expansion. In fact, we would have killed for 54.1% a few years ago, but it did miss Wall Street's consensus.
Well, you know we're in trouble when you say 300 down points is not so bad. Look, I just think what we are seeing is the culmination of why markets topped out a while back. They were telegraphing that all economic data points, statistics, and numbers were going to surprise to the downside. And interesting enough, we got that ADP report today, and I'm thinking to myself, wow, the 10-year yield has got to spike to the upside. Instead, the 10-year yield is crashing down a whole point to 2.56 as I speak. So I really do think the markets are screaming still that major slowdowns around the globe, some areas are going to be in recession, if not worse. And now you're seeing guidance for earnings coming down as a whole, guidance for GDP coming down. Of course, Apple's not helping. And China, I believe, has pretty much fallen off a cliff here, not just heading south. And again, markets, I think, are pretty smart, and you're seeing it in real time.
How does this impact then something like the Federal Reserve, which a week ago said, hey, you know what, we think the economy is going to be strong enough to warrant slowing it down a couple of times in 2019. Do they find a way to articulate quickly to this market then that they're going to reassess this? We heard from Robert Kaplan, Dallas Fed president, that he would do that, but he's not a voting member of the FOMC.
Well, with the 10-year yield at 2.56, it is a 100% lock that there is no way they are raising rates anymore. And I think the next meeting is January 29th and the 30th. I would suspect, and you write this down, that all the talk is going to be headed towards very dovish. You'll hear some words that incoming data has shown us that a slowdown is at hand, and we are now going to be very vigilant. That's the type of wording. So I think the Fed will have, again, the markets back as we move forward. I'm not so sure it's going to help right now as bear markets go through as much price and time as they want to, and leave no doubt, in spite of so many people saying we're still in a correction in a bull market, this is bear market action, and it's almost classic in nature.
Gary Kaltbaum, always appreciate it. Thanks for taking the time to call.